The Money Show. Personal finance.
Now we can talk about what you want to talk about. Executive Director at Galileo Capital and personal financial advisor Warren Ingram.
Does anybody argue with you?
And why are you picking a fight? Come on, Warren. And how do we choose a stellar financial advisor? We know we can get a financial advisor. We can go to the bank. We can go to the insurance company. We can
look
online. We can talk to mum and dad and to cousins and to well-off family members and say, how did you get so rich? And they might say, what a great financial advisor. And then you go to them and you don't like them, or they let you down, or they forget to phone you, or you forget to phone them. How do we embark on this journey of finding the stellar financial advisor?
I think that word of mouth to me is incredibly powerful. I think you shouldn't underestimate a quality referral from someone that you know and that you trust, and certainly I would add a huge amount of credibility to a referral from someone like that. I think it's dangerous when it's sort of your friend who says, this sold me a policy 2 years ago, and it wasn't a bad experience. That's not a referral, but when it's when it's someone that you think they've done well in their lives, they seem to be under control, and it's someone that they trust and they deal with, then I think I would give that huge credibility. And I think the second point here is while you're looking around, is make sure that you don't just take the first quality person that comes across your path and say, okay, well then I'm on the path with this person and I commit the next 20, 40, 60 years or whatever it is to this this new relationship. I think I always think that you should deal with at least 3 different people. Here's
the problem, though, Warren, in following that approach. And I accept that you're right. It's the same idea of getting a quote from. For once, you're right. But I'm going to argue with you. Whereas the same thing is taking your car to 3 mechanics, and you'll get 3 different versions of the same answer. And by the time, if you're not mechanically minded, you're not going to know which mechanic to go to. You get 3 plumbers into your house to give you a quote to replumb the bathroom, and you're going to get 3 different versions of the same story with different jargon being used, and you won't know your S-bend from your U-bend by the time they're finished with you. In the same way, the vast majority of us who go and talk to a financial advisor are going to do it on instinct, possibly more than substance, based on the conversations we have with people.
Okay. So when someone's arguing with you, they say you should say, I hear you, however. So I hear you.
Okay, what you're saying is you're wrong.
Yes. I think you're spot on in terms of how it is done currently. I just don't think that's the right way to go forward. Firstly, this is really, as you say, it's one of the most important relationships that you would have in your lifetime, and to a large extent would determine, not necessarily whether you're going to be wealthy or not, but it would have a big role on that. And so I would take the time to meet a few. And I think as a starting point, the relationship, that gelling with them, that instinct or whatever it is that you feel, that interpersonal connection, I think it is critical. If that advisor makes it comfortable for you to ask what on the surface might be, you might be embarrassed to ask, but you think are ignorant questions, something you should know. I think a quality advisor, number one, doesn't throw jargon at you. Number two, makes it incredibly comfortable for you to say, gee, these are all the mistakes I've made, or here's all my finances, I know it's a mess, or I'm sorry, I just don't understand what you're saying with all this jargon. Can you break it down for me in plain language? And if a quality advisor can do that sets you on a path. So I think that magic or that connection, or whatever you want to call it, that is valuable. But I think it's not the only thing. And I think as a starting point, I always want to know, in a situation like this, what's the advisor's qualifications? To me, that's an important thing. They need to have some kind of an academic basis for the way that they will look after you, the way that they'll understand the industry, understand you, and then give you a recommendation.
Registered financial advisors and financial planners do have to be qualified. They're a third of the financial advisors, registered financial advisors in the country today relative to what they were 5 years ago, because regulators have made it difficult to become a financial advisor. They require academic rigor, don't they?
Yeah. And I think, so to me, the gold standard from an academic point of view in South Africa would be something called the Certified Financial Planner. It's an internationally recognized qualification available from quite a few universities in South Africa. And there are lots of those, those certified financial planners around. And what's interesting is they're not just, sitting on their own in their own little business. They work for banks, they work for insurance companies, they work on their own in independent businesses as well. So I think, to me, that's an absolute starting point for dealing with someone, is if they don't have that qualification, or if they're not far down the road to getting it. Because, I mean, fair enough, it might be, it might take some people 3 years to get that qualification. Then someone says, look, I'm 2/3 of the way through and I'll be done by the next 12 months. I think I'd give that sort of a credibility as well. But I think that as an academic qualification, definitely a starting point. And I think non-starter if the person is not interested in getting it.
Okay, but I could provide you, at the risk of being sued, with a list of chartered accountants who are chartered accountants. They're qualified. Give you a list of advocates who've been to the bar and are regarded as advocates, who I don't want to deal with because I don't like them. Some of them I find dodgy. Some of them are blatantly dishonest. It doesn't necessarily make them the right person with whom to deal just because they have a big fancy title ahead of their name.
Agreed. So we're going to start with the order of priorities around that gelling with the person that we spoke about first. I think that is an important criteria, but you have to add the academics to that as well. I think it's not an either or. I think that the person has to have the academic qualification, and as you said, there are lots of highly qualified professionals who are extremely difficult to deal with and who it's very hard to relate to, and those you shouldn't deal with at all. If they intimidate you or if they're unapproachable, financial planning is all about the interpersonal relationship. So I would walk out of their office or show them out of your office very quickly. So I think that it is certainly a combination of chemistry, personal chemistry, and then the qualification. And then you need experience. That advisor definitely has to have a measure of experience.
Define a measure of experience.
So, I would say at the very least, at least 3 years of proper financial planning experience in a financial planning environment. In other words, they've worked in a financial planning business. The kind of regulatory thing would be that they've operated under supervision. In other words, they haven't just arrived at an organization with an academic qualification and started advising clients straight away. They've worked with or for a financial planner alongside that person, learning from them, and they then get their 3 years of experience. And to me, that's an absolute minimum criteria. I don't think. I think a really high quality individual with 3 years and the academic qualifications might well be fine. But typically, I would want them to have some sort of life experience as well. So in an ideal world, if they've only got 3 years of experience, it's because they've come from some other background and have gone into the financial planning industry. So if it's someone straight out of university with only 3 years of experience after that, I'd probably let them get some life experience as well. Because I think the interesting thing about money is when you're dealing with someone on the other side of the table, you want them to have a level of understanding of what it means either to have children or have lost a family member or lost a business or been retrenched or whatever the deal is. They've got some measure of what that's all about so that they can relate to you and advise you correctly in those difficult times.
They must have scars.
They have to have scars. And I think, the one thing I've learned from the time I was 21 in doing this to now, it's only 3 years later, of course.
Naturally. You got the requisite 3 years of experience.
Yeah, I've got my 3 years now. Is that level of understanding, from going through my own kind of traumas and watching other people's traumas, is then you start to understand what it means when that person is sitting in front of you and they're in tears or whatever the deal is. You actually understand, and you're able to advise them both with empathy, and I think that's important in a situation like this, and then give them whatever the numbers are in this whole thing.
Here's the problem with your 3-year experience guideline, is that nobody who's been in financial advice for under 10 years has ever experienced a collapse in the markets. Because the last time there was any really significant pullback in the markets was 10 years ago, 2008, 2009. Anybody who's not been in the industry at least that long doesn't know what it's like to sit opposite the table with somebody who's having palpitations because the value of their portfolio has declined by 10% in a week.
That's a fair point, and agree. I think you could probably say the same for all fund managers as well, who are managing billions of rands in South Africa, who haven't been through that kind of a major issue. But the point is, if they're in the right environment, in other words, they've been in the right sort of business that helps understand from other people who have been through it before, so experience, I guess, by osmosis, like in one way, and also that they've got the understanding of what's required and how to plan for those events. Then I don't think I wouldn't automatically disqualify them from that, because eventually you're going to end up with probably a few handfuls of advisors who meet all the criteria. And I think, that's also, not going to help people because there are only, so many.
Okay, you find the great financial advice. And all of us who have, been through a process of trying to find a family doctor or trying to find a family lawyer or trying to find somebody to look after you at the bank or whatever it is, we know how the process works. You know that not the first person you come across is necessarily the right person for you. You meet the financial advisor. But after 2 years, you look at the all-share index and let's look at the last 3 years. The all-share index has done 18%, and you look at the value of your investments, and your investments have done 12% over that time. And you've paid this person fees to give you financial advice, and you've paid commissions for products. And you're beginning to feel just a little bit uneasy with the quality of advice that you're getting.
Yes.
What do you do? Because now you've got a relationship. You've told us we need to gel, and we gel, and they're nice, they're lovely, and you have fun when you go and see them, and they inspire you and motivate you to do better and do more. But the financial performance that you're getting based on their advice underperforms. It doesn't suck, but it underperforms the average.
I think it's such a relevant question for the South African stock market right now, because if you're getting 12% over the last 12 months and the market's given you 18, it's really down to one share. That's sort of just absolutely shot the lights out for the year so far. And, a quality advisor in that instance might have said to you, listen, I'm really worried that, a large part of your financial future is attached to literally one share that's just going, right through the roof. And so I'd prefer to take a little bit of risk off the table and get you good growth, but not to the point where you're exposed to a potential bubble bursting.
Understand why you are getting the advice that you're getting.
Exactly. I think, before you made the investment decision with your advisor, that should have been explained to you that, we worry about risk, et cetera, et cetera. And then while this is happening, if you're getting decent growth, but the advisor has explained, again, simply and in plain language as to what's actually going on in your life, and you've got a level of comfort, then I think, that's a good measure. And the last thing you can do is just go and look, it's online. Go and have a look at the unit trust tables and go and see what a balanced fund is doing out there. And if you're getting roughly the same performance, then that tells you that maybe you're okay. Maybe it's not so bad.
Quick question, last 30 seconds. Ryan Price Lewis, economics graduate, rugby fanatic, and wannabe wine connoisseur. He sounds like a friend of yours. Give me an answer to this question on behalf of Ryan. Why is independent financial advice important? 30 seconds.
So I think the big thing here is that if the person works for a large product provider and they can only promote that company's products, then you might be in a situation where you might not have access to the whole market with the best range of investments or products that might suit you. So you'll get the best range from one company, the best that they can give you, and a lot of the time, people would feel that that's compromised advice, which is a fair point sometimes. I don't think it's valid all the time.
Warren Ingram from Galileo Capital on how to get yourself a great financial advisor. You're going to get a good financial advisor, you get a nice financial advisor, but you want a great financial advisor. The guidance this evening of Warren Ingram from Galileo Capital.